realized vol, decent spike, obviously dramatically higher on the geopolitics. We've got a 10-day realize up in the 70s for Bitcoin. We actually got it into near 100 on Ethereum. So that's this yellow line up here near 100. We've got deep negative carry in Ethereum now of sort of 20 vols or so. We've got a neutral carry pretty much in Bitcoin. Now, 1 month implied vols were actually about 4 or 5 vols lower, although the weeklies really held a bid. So the weekly stuff was firm because Gamma's been performing really well, but anything sort of 1 month and longer was getting offered. We were expecting a vol reset post halving, but now it's all going to depend on what happens with Iran and Israel. So all bets are off really there in terms of a vol reset. CPI data last week didn't really trigger massive crypto volatility as I expected, but then macro correlations have all started to rise due to the war risk, and that's basically what's driving things right now. Ethereum outperforming in terms of Gamma, as we said, whereas BTC is still more positive in terms of carry, but right now it does seem like selling Gamma is a bit of a dangerous trade. And, if you were going to sell any vol, you'd only be happy selling upside vol, I think. That is the kind of flow that we've been seeing, particularly in Ethereum. Because, vols are pumped now. If we do bounce, there's very high probability vol retraces down as well. So selling upside is kind of your safer play in vol space right now. Okay, term structure, you can see slight inversion in the curves coming back as that Gamma catches a bid. So we can see here 19th, which is this Friday, got a 10 vol bid, 2 vols for the week after, and then we're all softer, 5 down to 1 vols in the back. That's kind of what's going on there. You can see skew flipping very aggressively into put premium in the front weeklies, and then fading somewhat, nothing huge, half a vol to a vol in the back. So you still got a 6 vol call premium in the absolute back of Bitcoin, but then in the front, you've got a 12 vol put premium. So very steep skew curve going from puts into calls as we go through the different maturities. Remember that curve went much more uniform last week at like 2 or 3 vols out to 5, 6. It was much more stable. And then this moved down. Everyone piles into front end puts and is happy to sell front end calls. But in the back end, they're actually still buyers of calls, and that keeps that call bid. Ethereum inverting a bit more, seeing pressure again in the Vega space. 6 vol sell-off in the May, June buckets, but the front end up 20 points and then 5 points. So a big steepening, a big kind of backwardation happening in the front part of the curve of the term structure there. And then similar moves in skew, where that put skew comes into the front end and then call skew persisting in the back, although the call's getting more faded in Ethereum than they were in Bitcoin, where you now see Ethereum trading 4.8 vols in March 25 versus Bitcoin trading at 6 vols. So Ethereum call skew had gone a bit more bid than Bitcoin, if you remember, where people were looking for the Ethereum trade to be the next big trade. Not so much anymore. People kind of starting to throw in the towel a little bit on their bullishness on Ethereum, given that the ETF doesn't look like it's going to get done by May. I still think it gets done at some point, but for now, it's bringing out some call sellers and impacting the curve a little bit. So looking at the, and on that point, so the Ethereum Vega part of the curve, the fact that it is a bit better offered, it's interesting because it basically shows you that the vol spread in kind of 60-day and 90-day, that vol spread is only at around 2 vols. So Ethereum vol is trading 2 vols over Bitcoin in the kind of 2 to 3 month bucket, even though at the front end it's trading closer to 10 vols, right? But the realized spread is close to 30 vols. So in the 30-day realized, we're above 15. In the 10-day realized, we're near 30. So these bars show just how much we're realizing. But the implied spread has actually moved down because they're willing to offer you a bit of Ethereum vol, basically, right? Or the buyers have been buying put spreads, which are not a big Vega purchase, and the sellers are happy to sell outright calls. So that's been compressing the vol. So it does look like there's an opportunity. From a vol perspective, it definitely looks like there's an opportunity to buy Ethereum vol and sell Bitcoin vol right now, given that the massive realized differential, the fact that Ethereum seems to have got its beta back and remembers how to move now and is definitely not trading stable in either direction. So I think that there's an opportunity there, right? For the vol players out there, owning that vol spread, maybe in the 2-month bucket out to May, it actually looks quite good value versus how it's moving. And now looking at the spot spread in ETH Bitcoin, it did trade down below that big sort of long-term support, but it didn't go nuts. It has bounced since then, but in general, the fact that that level has been breached, it means there could be a lot more downside in this spread. And also we know there's obviously could be a lot of upside as well. So it's just, I'd say it's consistent with a risk asset meltdown. If we did get a meltdown in risk assets, like S&P down another 5% from here, then it makes sense that the Ethereum versus Bitcoin spot spread just cracks and goes to like some stupidly low levels. So that is a consistent that scenario. And I think you could get exposure to that scenario by doing some straddle swaps in May or something like that. And that's quite a cheap way to get that exposure. And even if we rally, there's a good chance that Ethereum out rallies Bitcoin as well, just because it's high beta right now. So I think that's quite a nice way for you to own that scenario without committing too much to being bearish at the local lows of the market, basically, right? So that's how I think about it from a vol perspective. And then skew here. So as realized vol spiked to the downside for a change on the back of these war fears, we saw that violent reversal back into put skew, particularly in the front expiries. So seeing about a 10 vol put skew in the front, investors obviously bracing for a reaction from Israel. Now the skew curves are super steep, put skew in the front end, call skew in the back. BTC's done a better job of holding onto its call skew in the back as those long dated call buys remain, looking at 100K in December, looking at 200K in March, those sort of things. And as you said, Ethereum upside in the long end getting faded somewhat as well. Now, we've seen once again the speed at which the short-term skew reacts to spot moves in crypto is absolutely unbelievable. And it just really shows you, how the options market is just chasing moves every which way. And therefore, we do think skew probably flips back away from puts towards calls if we start to bounce. It's just the nature of the beast. But the fact that the spot vol correlation has flipped in the last leg down, we've finally seen vol going bid with spot lower. We haven't seen that most of this year. In any initial bounce, provided we don't make new highs, in any bounce from here to 70K on Bitcoin and from here to say 3,700 on ETH, you're probably going to see vol lower, which is why I think call ratio structures are a no-brainer. And for any bullish traders out there who want to add risk, call ratio structures are the way to do it. That's what I've been doing. As you guys know, I sent an alert on Sunday. I was actually trading that on Sunday because the opportunity presented itself and I thought needs to be done. It actually did do pretty well on Monday morning. It was up I think my Ethereum trades were up 80% in a day, but they have faded since then and given it back. But the point is, those are the nice ways to dip your toes in without spending too much premium, given that vols are pumped, but getting a nice payoff if we do get a bounce and vol gets crushed, which is the most likely vol spot scenario if we do get a bounce. All right, so obviously we're going to be in sell puts in all these strategy compasses, but selling puts with a potential World War III hanging over us is a bit suicidal. So I would never recommend that. You need to be a bit smarter than that. Volumes, flows up about 25% to 9.5 billion on Bitcoin. Obviously hedging activity coming in. Liquidations increasing as the moves got violent. Now, bullish flows were focused on the long end initially, where we saw, June call spreads, debt calls, March calls, some rolling around from December to September, things like that. Now, we obviously saw a load of short-dated hedging coming in the form of April and May puts and put spreads as we sold off. Some of that was monetized when we got the puke down to 60K in Bitcoin. And then we've seen buyers yesterday come in as well in the form of 69K calls in May, and some short dated call spread buying as well, with the likes of 64K and 70K in April. So lots of two-way going on there, basically based on the swings and people trying to play it opportunistically. Now, Ethereum flows were much more biased towards the downside. We did see an uptick in volume, similar 25% up to around, I've put 625 billion, which is not right. It's 6.25 billion is the notional. Now, the main bearish structure that people were using, the big blocks, were selling April 3,500 and 3,600 calls and using that as a funding leg to buy June put spreads, 3,000, 2,500 put spreads. So agreeing with me that if this correction extends further on ETH it's going to find some support in the mid-20s, in the mid-2000s, sorry. And therefore using those put spreads, but instead of buying super expensive vol, using put spreads and put spread collars, but via a calendar trade to basically earn the theta quickly on the Aprils and own the put spread on June, basically, right? So that's the kind of flow, the predominant flow that we saw on Ethereum. And what that shows you is that is a net Vega sale, right? You know, in general, we're not getting a massive Vega buy on Ethereum, which is why that Ethereum vol outside of the super front weeklies is not catching a massive bid, because people are using more Vega neutral, Vega short structures to express their views. In terms of positioning on the Gamma front, we got BTC dealer Gamma pretty stable from where it was last week at around minus 20, 30 million. Obviously, you can see that we did have like 65 to 70K as the main short strikes. That's all kind of rolled itself down. So 70K, we do still see as a short strike. We've got 65 here, and now we've got a big short strike at 60. So in general, we've seen as we've traded lower, the Gamma part of the curve has found a bid, and dealers have basically been taken short on the way down. But we're just kind of moving along down here. And that Gamma positioning has been relatively stable. We have got a few super short dated long sitting there as well, counteracting that. In terms of Ethereum dealer Gamma, that faded from long. It was fairly long, about 30 mil down to zero. We can see this massive short strike at 3,000 being the big driver of that, as we've seen spot come down and that protection buying come in. We do see dealers long below that at 2,800 and 2,400. So, you know, that Gamma positioning is likely to get longer if we move. And if we just sit here around 3,000, it's going to get shorter as that gets closer to expiry. So that's going to be kind of localized around the 3,000 area, and you're going to behave a bit like a fly type structure that the dealers have on there, basically. Now, in general, I don't think the Gamma positions are big enough to really be driving things. I think geopolitics is driving everything right now. I don't think there's going to be any particular sticky strikes or anything like that. I think we are at the whim of what Israel and Iran decide to say and do. And so I don't think you're going to do much. You're going to have much edge kind of reading much into the Gamma positioning right now. Okay. But there's certainly nothing to suggest that we're going to be sticking around any certain levels on the option side. Okay, that's positioning. That's the summary for this week in crypto. Thanks a lot. As always, I'll catch you guys later.